Hello friends, once again I welcome you to one of my videos. Today I'm going to be showing you a very short video simply explaining how I went about a very gorgeous trade on AUDCAD, the Australian dollars versus the Canadian dollars. This week has been very gorgeous, very fascinating, and indeed really wonderful. Some days are good, some days are bad. Some weeks are good, some weeks are bad. Some months are good, some months are bad. Some years are good, some years are bad. And that is Forex for you. And that is why when you are presented with a profit opportunity, a good trader will always want to maximize it, because you cannot always win every day. You cannot always win every month, every week. So whatever you have today can be used to cater for the bad days. That is how trading is. So we don't go after making money, decide to go and start squandering the money. No, because it's not all rosy. But I must tell you once again that this week has been absolutely gorgeous. And so quickly I want to explain one of the trades I took today. In fact, happened to be the only trade I've taken so far, and I think I'm satisfied with it. I would not want to take any more trade on my demo account, on my practice account. Actually, it's important for me to state that for now. As you can see, AUDCAD, this pair is in a downtrend. Very clear. The pair is making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So we can see it is very clear that it is in a very, steep downtrend. And on my chart, I have the EMAs, the 50 EMA and the 50 SMA, both of them. The one in blue is the 50 SMA, that is a simple moving average, and the one in red is the 50 EMA, exponential moving average. So you can see that the one in red is always closest to price. The one in red is always closest to price, react faster than the one in blue. Okay, I think that is clear enough. Now the logic, why am I using the 50 EMA or the moving average? You can see that most times they act as dynamic support and resistance. In this case, because the market is in a downtrend, the moving average will tend to be acting as dynamic resistance, so that anytime the price touches this region between the moving average, we expect price to go down. And eventually that is what I also capitalized on. I hope that is clear. Anytime it touches, it gives you more confidence that the price will be going down along the trend. Okay, so that's one of the reasons why I do make use of the 50 periods moving averages. Some you can use one, you can use two, doesn't really matter. Okay, my strategy actually is what we refer to as the break and the retest. The break and the retest. It's a very simple strategy. The break and the retest simply means that a particular level, once broken, price tends to retest that level. For instance, if a support is broken, there is a high chance that price will retest the level as resistance. But you can see that it is not in all cases that we do have break and retest. As you can see, this level was broken. It was holding here as support, here as support, here as support with this many weeks, but eventually it was broken by this candle and we didn't have the retest. What about this level? You can see that this level is another support level. And how do you know that? Because of these wicks. These wicks, you see, simply tells us that the price is not allowed to break below this level. That's why you see wicks. These wicks are called rejection. They are rejecting this level. They don't want to break below this level. But eventually, we have a candle that smashed through the level, and this candle smashed through the level, as you can see, broke through the level, and immediately that happens, we will now start to look for a retest. We will now start to look for a retest. And eventually, as you can see, there was a retest of this level. So this is what we call break and retest. It's a very simple strategy, and that is my strategy. If you may ask me, I trade majority of the time break and retest. And now after the retest, what we want to see are wicks on that level. The wicks simply tell us that this level is being rejected to the upside. Movement upward is being rejected. That is what this wick is telling us. The wicks here is telling us that movement of price downward is being rejected. Now the reverse is the case. In this place, this level was acting as a support, and now this level is now acting as a resistance, resisting the upward movement of price. And that is evident from the wicks rejection, the wicks formation. And when we see wicks formation, it is not yet time for us to enter our trade. What do you see? There are different ways you can enter your trade, but in this case, we identified a bearish engulfing bar, engulfing bar. And why is it an engulfing bar? Because this candle that formed engulfed the previous candle, and it's telling us that there is a lot of selling pressure now in the market. Immediately you see this, it is very possible and reasonable that you can take your trades, okay? You can take your trades. Sorry about that. Sorry. You can take your trades. I'll fix it. Let me just delete it. So it means that, for example, you can take your sell trade, short the market, you bring your stop loss very close to it. Let's take 11 pips. As you can see, 11 pips stop loss, and below we have our target. You can say, okay, let me target, this is 2.55 risk to reward ratio. You can say, let me target 3.00 risk to reward ratio. Okay, very difficult for me to get. Let's assume this is 3.00 risk to reward ratio. And what did you see? It was a great winner. It was a great winner, as you can see. Now, the truth is that I didn't take this trade. When I saw this, I have to wait for the next opportunity. You are most of the time never too late to take trade, okay? You don't say because you missed an opportunity and that is the end for you. No, you can also look for other opportunities down the line, okay? Now, I noticed that another level was formed by this week's rejection. how is a level formed? When you have wicks rejection, formation of wicks can tell you that there is a particular level that price is not able to break below, and this is shown by this black line. Price is not able to break below this level, so you take note of that level and you wait and anticipate the break of that level, and exactly the break of that level came by this massive candle. Break this level. That was when Mr. Ernest was very, very keen and interested in this pair and start waiting for the opportunity of a retest of this level. And eventually, this is a 15 minutes chart. It means that we waited patiently for 1, 2, 3, 4, 5, 6, 7, 8. That's 2 hours. 1, 2, 3, 4, 5, 6, 7, 8. 4 hours. 1, 2, 3, 4. About 5 hours before we eventually had a retest. So that is telling you that trading is patience. Patience is very important in trading. Just wait for the opportunity to present itself to you. And immediately I see this retest, and my prayer was, I want to see a doji, I want to see a depletion, I want to see a depletion of this bullish pressure, because it's a bullish pressure. Look at this bullish candle, very, very bullish to the upside. Okay, now when I saw this next candle, this small candle here, what we call spinning tops, I was happy. Spinning top actually means that this bullish pressure is reducing, and finally we have this doji. This is an indecision candle, so we cannot tell at the moment whether it is the buyer that is having upper hand or the seller that is having upper hand when we see this candle. The only time we can decide is when we wait for the next candle to see whether it is to the upside or to the downside, and eventually we have this bearish engulfing candle appearing, and immediately that is where I pull the trigger for a sell. Another thing I'd like to tell us is this. You can see that there are confluences of the moving averages and my horizontal level. They coincide, and this is just wonderful. This is 3 confluences making me to take this trade. Firstly is the moving average. Secondly is this horizontal level coinciding. And thirdly is the candlestick patterns giving us an idea that this level is strong and is disallowing price to break above it, at this point in time. And now when you see the bearish momentum candle to the downside, it gives you a confirmation that it is high time you take a trade. And that is how the trade was taken, as you can see. And our stop loss was 12 pips above this high, and we went for the risk reward ratio of 3, and eventually our trade was hit just within the space of 1, 2, 3, 4, 1 hour, 1, 2, 3, 4, 2 hours, 1, 2, 3, 1, 2, 3, 4, 3 hours. You have an absolutely gorgeous trade. And let me be frank with you, this demo account, I had 50,000 USD, and for this particular trade I made 1,016 USD. If you convert that to Naira, you are close to 400,000 Naira within 3 hours on a particular day. That is the potential of what Forex can give to you. So I believe I've been able to explain the logic behind, the reason or the logic behind my taking this trade. As you can see, my strategy is break and retest, and you start looking for those weak rejection and momentum candle in favor of the direction of the trend. Once again, thank you. Keeping trading simple. Not all weeks or days will present simple opportunity for you like this, but when they present themselves, please, as traders, we should capitalize on them and make sure that we get the best out of it. Thank you, and I hope that you will do well. Wishing you all the best.